Good afternoon, everyone, and welcome to an introduction to trading Nadex products. My name is Todd Rich. I am head of education here at Nadex, and I will be taking you through today's presentation. So first, I want to thank everyone for joining me. We got quite a crowd on today, which is exciting. And we are going to be covering, it's going to be a high level, a bit, an introduction to the different types of products that we've got at Nadex, all designed to take advantage of short-term price action, each with their unique benefits. So I do want to get into it, and we've got a lot to cover today. So with that, I do want to keep us moving along. Before I start, I do have to take care of this housekeeping item. This webinar, as are all of our webinars, are brought to you by our compliance department. I do need to cover this though. This is important, that trading does involve risk. It may not be appropriate for everyone, and that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything I say as a buy or sell recommendation. And that's actually going to be very important because I am going to be going through a slide deck to begin with. And then we are going to do what I call a little bit of off-roading, where I will bring up the platform and it'll really help drive home and help resonate what these products are. Now, I do want to clear this up as another housekeeping item, and I'm already got a couple of questions in this regard. I love it because you guys are one step ahead of me. And the question is this session being recorded? And the answer is yes. We record all of our webinars, and it will be available on the Nadex website. You'll go to Learning Webinars, and you'll see there's an archive section. In fact, I will point that out when we go over to do the platform part of the, I'll have to bring up the website, but I should be able to show you where that is, but you will definitely be able to watch this again or on demand so that it fits your schedule. I know that I personally don't watch any TV live unless it's sports. Everyone records everything and consumes content on their own schedule. So we certainly make this available to you to consume it when it's convenient for you or to go back and review it. Okay. I think that takes care of our housekeeping items. I do like to put this up front as well, that if you have any questions for Nadex, you're having any challenges, whether it's around your account, our products, the platform, whatever it is, we are accessible. We're here to help. Email us, customerservice@nadex.com, customerservice@nadex.com. I would also suggest you follow us on social media, and I'm going to point out one of those in particular, and that is YouTube. I would highly, highly recommend that you just go to YouTube and you search for Nadex, and you can subscribe to our channel. Now, we also put recordings of all of our content there as well, and you can go back and see all of the content that we published. You will also notice that we do a live stream on YouTube every morning. Every morning, it's at 8:45 a.m. Eastern, 7:45 a.m. Central, and we do an analysis of what the hotspots are potentially in the market for that day. So if you're looking for some ideas before the market opens on where you might want to be looking and what might be volatile, please join us. Every morning we live stream on YouTube. Okay, now let's start getting into what are we going to cover today with the introduction to Nadex products. Now, I will tell you this is a little bit of a high-level overview of our products. Now, before I get to our products, I'm going to spend a minute or two just talking generically about Nadex, because I think it's important to understand the products that we've got in context to who Nadex is and why Nadex even exists. I will then define and go through with you at a high level our three unique products, and they are binary options, knockouts, and call spreads. We will go through each, and we will go through examples of each. But then, more importantly, and I am really into the practical nature of this, I'm going to show you. I like to say this because I think it's in my nature. My mom is from the great state of Missouri, or if you want to pronounce it right, Missouri, and it's the show me state. And I am going to jump over to the Nadex platform and show you the tools and how to understand the layout for each product so you can see what you're really trading. And I think once you've got a general idea of binary options, knockouts, and call spreads, when I go to the platform, you go, aha, I get it. It'll make it much more intuitive and easy to understand. All right, now the other thing I am going to mention, if you've got questions along the way, there is a little questions box. Please feel free to type in your questions. I will make best efforts to answer all of them, and I will even make best efforts to note them and answer them as we go. If I miss them, I will try to potentially catch them at the end because I want to make sure that I answer all of your questions. I mean, this is a great opportunity for you to interact with us. I can't promise I will get to all of them, but I will certainly make best efforts to do so. And I hope that going through this presentation, I answer all those questions so that you feel confident and comfortable on what binary options, knockouts, and call spreads are, and it'll enhance your comfort level for going and trading them. The one last thing I'm going to mention before I get into it is if you do not have a demo account, I would highly recommend that you sign up for one. It does not take very long. It is very easy. The steps are on our website, and you can open a demo account, and that is practice trading, paper trading, right? Where you get fake money and you can practice trading. You can learn how to maneuver the platform, and you can get an idea of how the products work. Now, I am going to be very clear. Trading in a demo environment is not the same as trading in a live environment, and it necessarily cannot be the same. Now, while we stream live data to the demo environment, when you've got a marketplace and different people are interacting and some people want to buy and some people want to sell, the live marketplace is where all of the eyeballs are and the chips are on the line and you've got a bunch of people interacting and doing what they want to do. In a demo environment, you are only interacting with other people in a demo environment. And people do things differently in a demo environment that they would not necessarily do in a live environment because everyone is practicing. So the fact that it's a practice demo environment means your experience will necessarily be different than a live environment. And that is very important to understand, but I highly recommend you get a demo account. Okay, so let's get into it. Who is Nadex? What is Nadex? And Nadex is actually an acronym. As you know, we love acronyms in our society, and it's short for North American Derivatives Exchange. Now, the big important thing about Nadex, and you'll see that I highlight, underline, and bold the important words, is we are a regulated exchange in the United States. We are regulated by the CFTC, the Commodity Future Trade Commission. Now, the reason that I mention that, and it doesn't matter, the designations as a contract market and as a clearing organization are nice, but it's more important that you know that we are a properly regulated exchange. Now, when it comes to binary options in particular, there are actually only two regulated exchanges in the United States. The other one is very, very tiny, very, very small. They've only got contracts on the weather, but they do hold a medallion and a proper license. Nadex is the premier binary options exchange in the United States. Now, if you get a VPN, a virtual private network, and you go on the internet, you might be able to access and find other binary options providers in the world over the internet, but they are not regulated in the United States. And with that, I would say if you're trading with a binary options exchange that is not regulated in the United States, they do not have to adhere to the rules, laws, and regulations of the United States. And if you were to have some type of challenge, I would say caveat emptor, buyer beware. If you were looking for some type of recourse, if something were to go wrong, you would have no legal standing in the United States to try to get some type of recourse. Whereas we are obligated, we are audited, we are monitored, we have obligations to maintain a proper, fair, and orderly market. As well as adhere to all the laws and rules of the United States when it comes to account management, record keeping, all of that. So outside the United States, offshore binary provider, I can't attest or vouch for any of that. But Nadex is a proper regulated exchange, and that's a very important designation. Now, what is it that Nadex was designed for? And we designed contracts specifically for the retail trader. And it's incredible how this retail trading space has absolutely exploded in the United States, and Nadex has been around for a decade. And you're seeing other places try to play catch up to design products for the retail trader. Now, what do I mean by products for the retail trader? And specifically, we have contracts that have a very, very low cost of entry. We have tiny contracts designed for retail traders. In fact, our binary options, each one of those, the total notional value of a binary can never be more than $100. So they are very small notional value contracts. Now, our knockouts and call spreads have slightly larger notional values, but still designed for the retail trader so that you do not need thousands of dollars to access the markets. You can do so with a couple $100 and you can get in on the price action. That is what contracts designed for the retail trader are. The other thing that we did is we created contracts that every one of our products has clearly defined risk. It is a calculatable number that you know exactly what your potential risk is before you even get into a trade. All right, we even calculate it for you on the order ticket, and that means there's no surprises. And that is the one thing that retail traders do not like. In fact, most traders do not like are surprises, because surprises are generally bad things. Like, oh, what happened? I didn't realize that could happen. There's other terms that you may have heard out there when trading futures, things like initial margin, maintenance margin, margin calls. Throw all that out. None of that applies to Nadex. We completely get rid of that concept. We have such small contracts that every single trade is fully collateralized, and you cannot lose more than what you initially put into a trade, period, end of story. You also have defined profit potential. So some people go, well, that's limited profit. Yes, but when you're doing very, very short-term trading, you should have defined risk. You should have defined reward. It makes you a disciplined trader. We will get into that when we talk about the products. All right, and what is it that Nadex has? We have binary options, call spreads, and knockouts. And what a lot of traders do is they're leveraging technical analysis and looking for opportunities to take advantage of short-term price action. And that's really what people are doing at Nadex. We are a regulated exchange. We have to adhere to the laws, rules, regulations of the United States. We report into the CFTC, which is the exact same regulator that the Intercontinental Exchange. They own the New York Stock Exchange. They report into the CFTC. The other big futures exchanges in the United States, the CME or the CBOT, the Chicago Mercantile Exchange or the Chicago Board of Trade, also report into the CFTC. So it's rather interesting how that works. Now, I am going to, I'm seeing some questions come in, and I will try to answer these. Some folks are having differences when they look at some of the pricing on the Nadex platform versus what they see in TradingView. I will show you. Our products settle and trade. Our underlying are the futures products. So, for instance, on the US 500, it will track the S&P 500 futures contract that trades on the CME, the Chicago Mercantile Exchange. So, and we do absolutely track that. All right. And that's actually what we will settle against as well. So I don't know what you're seeing on your other platform, but we are now, when it comes to currencies, our products actually track the spot market. So that is also where we might be different. So it's important to know, and I'm just mentioning that because we got a specific question about that. And when it's looking at the equity indices, we trade against the futures contract. And when we're trading foreign exchange, when we're looking at that, it goes against the spot market. So that may cause some variance in what you see on other platforms. Okay, let's start talking about binary options. Okay, and I want to go through, and again, this is going to be high level. I do a deeper dive, a full-blown session on binary options. You can look for an upcoming webinar. I think I'll be doing one in a few weeks. I know I'm going to be covering it next week. In fact, it is absolutely a topic I'll be covering on Tuesday. We are doing an entire day long how to be a day trader at Nadex. I will do a session specifically on binary options. I will do a separate session specifically on knockouts and call spreads. My colleague Dan Cook is going to be right after each one of those sessions. He's going to be discussing day trading strategies for binary options right after I do binary options. He'll discuss trading strategies, day trading strategies for knockouts and call spreads. And then we've also got how to choose which duration contract, and even some bit on trader psychology. So if you're not registered for our boot camp, how to be a day trader at Nadex next week, on the Nadex website, you go to learning webinars. Instead of going to the archive to find the recording, you'll just see upcoming webinars and you can register right there for next Tuesday. I will do a full-blown session, but I am going to do a high-level overview of all of our products for you right now. So you'll hear a bit about what I'll cover next week. So what are binary options? One, they are short-term contracts with defined risk, defined reward. I mentioned that up front, that all of our contracts are defined risk, defined reward. And a binary option is a prediction, a statement. Right? And you're actually familiar with binary options in a different context, but we will go through that in a second. But a binary option is a statement, and it's got three components to it. The three components are an underlying market, a condition, and then there is an expiration time. So when it comes to binary options at Nadex, we've got a variety of underlying markets. You can trade equity indices, you can trade commodities, you can trade foreign exchange. We even have event contracts around economic numbers. So there's an underlying market, then there's a condition, right? And that is sometimes referred to as the strike price or the level, right? And it's always phrased in the form of a question. Will this market be higher than, and then there's an expiration time, at this time? That is a binary option. Will gold, the underlying market, be higher than 1720, the condition or strike price or level, in the next 2 hours, or at the end of today, or at the end of the week? So you've got a variety of things that you need to choose from. You've got to choose an underlying market. You've got to choose the condition. And we will give you a variety of conditions, whether it's 1700, 1720, 1740, 1760. So you're going to have a variety of different conditions or strike prices or levels to choose from. And then a time frame, the duration. In the next 20 minutes, in the next 2 hours, in the next, by the end of today, by the end of the week. Okay, that is a binary option. Now, interestingly enough, and this is also something that distinguishes Nadex binary options from other binary options providers, is you can buy or sell these. You're not limited to just buying them. And whether you're buying or selling, your risk or your reward is capped. It is a known commodity up front. So you know what you could potentially make or what you could potentially lose before you even enter a trade. And a binary option will trade in a price range. It will trade between 0 and 100. Oh, and by the way, I mentioned the boot camp next week. It will also be recorded and it will be available. So again, we record everything, but I would recommend you register for it. Just register for it as a reminder, because you'll also get the alerts when the recordings are ready and things of that nature. So I would recommend that you, even if you can't attend next week, register for it anyway. It takes 2 seconds. All right, so a binary option. It trades between 0 and 100. So consider 0 to be the floor and 100 to be the ceiling. And I mentioned that you can both buy or sell these. So if I'm looking, if there's a market, gold, will it be higher than 1720 at the end of the day? And I could think yes. Or I can also say no, it won't. All right. And if you think it will be, you buy it. And if you think it won't be, you can sell it. That is something that is distinctly different with Nadex binary options than other binary options providers. All right, so let's keep going with binary options a little bit further. It is a true or false prediction. Either the event happens or it does not happen. That is why it's actually called a binary option. There are only 2 outcomes in the end. When we are talking about binary options at any expiration time, all of the binary options, whatever strike condition level it is, all of them will either settle to 100 or 0. That is it. It is an all or nothing proposition. If it's true, the contract goes to 100. If it's false, it goes to 0. So that is why it's called a binary option. You can probably, I don't really want to use this analogy, but it sort of makes sense. If you watch sports, will the Chicago Bears beat the Green Bay Packers? Yes or no? And either they beat them or they don't beat them. Will gold be above 1720 at the end of the day? Yes or no? It either finishes above 1720 or it doesn't. So I don't want to equate the two, but the concept of the binary nature of it, of all or nothing, it goes to 100 or it goes to 0, that should help. It should help bring it home or make it resonate with you so you understand the concept. Now, what is this 0 and 100? And the price of a binary option can be thought of generically or roughly being the probability at that moment in time of the event being true, as determined by the marketplace. So there are people out there, some people think it's going to be true, some people think it's going to be false, and people are buying or selling whether they think it's going to be true or false, and you reach an equilibrium price at this moment in time. So let's just use gold for that example because it's nice and easy. If gold were trading at 1720 per ounce, and you were looking at the 1720 binary option in gold, it would be right there. Could gold go higher or go lower? The probability of that would be equal. Gold could either go up or gold could either go down. So if it's right there at the same price, if the gold is trading at the same price as the condition, there's a 50-50 chance that it's either going to settle higher or lower. I don't know what gold's going to do, but it's right there and it could do either or equally. So you would generally expect the price of the binary option at that moment in time to be trading around 50, around a 50-50 chance. And if you thought gold were going to settle higher, you would buy it at 50 and it could go to 100. And if it was true, or if it was false, it would go to 0. And if you didn't think it was going to settle higher, you thought gold was going to go lower, you could sell it at 50. And if gold went lower and settled lower, it would go to 0. And if it were true, it would go to 100. Now, this is something cool that as we design these contracts, not only is it the probability at that moment in time of the statement being true, and as the price of the underlying goes up and down, the probabilities for all of the different conditions will fluctuate. They'll change dynamically as the price goes higher in the underlying. Things will change in the for the probabilities of the conditions. The other thing that will impact the price of a binary option, it's not just that volatility and the price movement in the underlying, it's also the concept of time. If there is a lot of time, so let's say, for instance, it's the beginning of the week and I'm looking at a weekly binary option in gold. So on a Sunday night or a Monday, I'm looking at gold, but I'm looking at the binary option that settles on Friday. There's going to be 5 days for gold to move around, and it won't settle until Friday. It won't settle until Friday, and you won't know whether it's true or false until Friday. Now, as you get closer and closer to settlement time, when there's a little bit of time left, and we do have 5-minute binary options. We have binary options in foreign exchange that reset every 5 minutes. Now there is very little time, and as the price of the underlying moves around, you'll see the underlying the probabilities of the different conditions move dramatically because it's so close. It's like the final seconds of the game. What's going to happen? Is your trade going to win or is your trade going to lose? Is this condition going to be true? Is it going to settle above, or is it going to be false? Will it not settle above? Now someone's and I'm looking, is there an algorithm for predicting the probability? And really, the algorithm is the marketplace. That we have a true marketplace. People's opinion, people who want to buy, people who want to sell. It is the ultimate algorithm of determining what a fair price at this moment in time. Now, I can go into why is this a fair price, and this is something that is also different from other binary options providers, is the fact that you can both buy or sell, and I'm going to cover this in a little bit. If you bought a binary option and you go, I changed my mind, you can sell it back out. So, and when you're trading, you actually see a bid-ask spread. So you know what price you could see where you could potentially buy. And if you want to get out immediately, you see the price where you can sell. That's how you know it's a fair market, because you could trade on both sides of the market and you can see it. The best way for me to explain types of markets that aren't like that, go buy a car, go get a used car. You see the price that they offer a used car at, or you buy a new car, but the second you drive off the lot, if you drove right back to the dealership and said, I want to sell this to you, they're not going to give you the same price that they just sold it to you. They're going to lower it. Hey, that car's been driven. I can't buy it back for the price that I sold it to you. I got to buy it back for lower. Or think about a grocery store. Go buy a bunch of steaks, and you 2 days later you only ate 3 of the 5 steaks you bought. You can't go back to the butcher and sell your 2 pieces of unused meat. back to the butcher. They're not going to buy it back from you. It doesn't work that way. But with Nadex binary options, it's an open order book, and you see if you buy or sell, you know you can get out on the other side. That is the probabilities. That's the marketplace. That is everybody. That's you. That's everyone else participating. It's who's ever looking at the marketplace determining the fair probability at that moment in time. And in binary options, the price of a binary option will fluctuate based on movement in the underlying, based on volatility. If it's moving all over the place, it will change the probabilities, and time. As you get closer and closer to settlement time, you'll see things get a little crazy. All right, so that's binary options. And when I show you on the platform and we do a practical demonstration, I think you'll be able to follow the probabilities. In fact, I'm probably going to look at a 5-minute binary option just so you can see how volatile binary options can be if you're looking for short-term price action in the settling minutes. Now, some folks don't want that crazy swing, and so they choose different duration contracts like 2 hours or daily or weekly. You'll still get movement. It'll just be, it won't be as dramatic. All right. That's binary options at a high level. I want to get on to some of the other contracts. The next one I'm going to move to are knockouts. Now, knockouts I think are probably our most intuitive product. All right, and the reason I say that is knockouts are what we call Delta 1 products. Okay, and you're going to understand what that means in a second. But knockouts move directly in line with the underlying. Now let's go through what a Nadex knockout is. It's a contract and it's got a price range. It's got a predetermined price range that's built into the contract. And that price range has 2 levels. Now, we mentioned floor and ceiling in a knockout. Those are 0 and 100. It can't go any lower than 0. It can't go any higher than 100. And a binary option, and by the way, that was also the dollar value of a binary option. Since they're all worth $100, if you bought a binary option at 50, you paid $50 for it, and if it settles true and it goes to 100, you made 50. You risked 50 to make 50. If you bought it for 50 and it went to 0, you lost. You risked 50 to potentially make 50, but it went to 0. So the math, it'll always add up to 100. Now, sorry, that was a little side note. I think I missed that point earlier. Now, in a knockout, we've got a floor and a ceiling, but those floor and ceiling prices are actual price levels of the underlying contract. All right, and the price of a knockout will trade between the floor and the ceiling. Now I'm going to use gold as an example again. A binary option, you're trading the probability of it finishing above or potentially below a certain level. If you traded a gold knockout, you're actually trading the price of gold. So we might have a knockout that has a range of 1700 to 1750. And the price that you trade will be the price of gold between that floor and a ceiling. So let's say gold were trading at 1720. You could buy gold because you thought it was going higher. If you thought it was going lower, you can sell it. That concept is a little difficult to some people, that you can sell something that you do not own. Really, what you're doing is you're taking a short position. If you sell a knockout, you are predicting the price will go lower, and you're looking to profit if the price goes lower. So you're just taking a short position. And a knockout, if you think it's going higher, you buy it because you think it's going up. So that's how knockouts move. If you think it's going up, you buy it. If you think it's going down, you sell it. And before you get into the trade, it's got predefined boundaries around it. It has that floor below and it has a ceiling above. Now, what do those floor and ceiling represent? How do these actually work? Now, knockouts, and this is important, expire in one of 2 ways. Okay, by price or by time. Now, what do I mean? Let's talk about price triggered settlement. So we've got that underlying price, all right, and here I'm using gold, and it's the gold future contract, by the way. If I thought gold were going higher and I bought it, all right, but then it touches either the floor or the ceiling, I would get knocked out of the trade. That is why they're called knockouts. All right. It's a price triggered settlement. You have a clear boundary below and a clear boundary above where you get knocked out if the contract touches that price. Right. It's not, and the contract will immediately settle. So if, for instance, I bought gold and I thought it were going higher, but I were wrong and it touched the floor, I would get knocked out of my long trade. It went down, it touched the floor, and I would get knocked out and I would experience maximum potential loss. I bought it, I thought it was going up, it went down and touched the floor, I'm knocked out. Now, if gold kept going lower and lower and lower, I cannot lose anymore. All right, my losses were limited to it touching the floor. Now, if gold were to go higher and it touched the ceiling, I would then get knocked out for maximum profit. Now, if gold were to keep going higher and higher and higher, I could not profit anymore. But in that vein, it is forcing you to take a profit. And that is sort of, and if you look on Nadex, we've got some tools and things that are available, but you should have an exit strategy whenever you get into a trade. Where would I take a, where would I want to be stopped out for a loss if I were wrong? And where would I ring the cash register and take my profits if I were right? And this sort of forces you into that mindset. Now, I can think gold's going lower. So if I just take a short position, if I sell a knockout, and let's start with, I was wrong. I thought the price was going down, but the price indeed went up and it touches the ceiling, I would get knocked out and experience maximum loss. And if I sold it and it went down and touched the floor, I would get knocked out for maximum profit. Okay, so that is how a knockout works. And I think that's the most intuitive concept or product that we've got. It is a delta one. The price of the underlying and the price of what you're trading for that knockout are going to be right in line, and you've got predefined boundaries around that for you to limit losses or have a profit goal or what you're aiming for baked into the trade. And for any knockout, we generally always have 4 knockouts available, so you can choose which knockout range best suits your trade and your risk reward profile. So if you've got to make that determination, how much am I willing to make? How much am I willing to lose? You can choose that knockout. All right, and then now in a binary option, all right, in the and this is how it's different from a binary. A knockout, it's the price of the underlying, and we calculate what you could potentially make and what you could potentially lose up front if you're right or you're wrong. In a binary option, remember, it's either 0 or 100. So getting into it, if I buy a binary option for 30 because I think it's going to be true, but there's only a 30% chance of it being true, and it turns out to be false, I lose the 30 that I put into it. Now, if it ends up being true and it goes to 100, I make 70. So in a binary option, I know what my risk reward relationship, and again, we calculate this on the ticket. Hey, I'm willing to risk 30 to potentially make 70. Or you could take a higher probability trade. You might want to risk 70, thinking this thing is definitely going to stay above a price, and it goes to 100 to potentially only make 30. I will go through all of that when I show you the platform for binary options. But you'll see how binary options, it's always $100. and it's the probability, and you see what your risk reward is up front. And I will go through that clearly. On a knockout, it's going to be, we'll calculate it for you. You are trading a Delta 1 product. Now, if for some reason on a knockout, it doesn't touch either the floor or ceiling. Now we always list our knockouts. They start off as weekly contracts, and then they exist until they knock out. If when a contract gets knocked out and settles, we add a new one. So we generally try to keep 4 of them open at all time. But at the end of the week, if a knockout hasn't hit the floor or ceiling, it will settle by time. It will settle by time. And at that point, your profit or loss would simply be the difference between where you bought or sold it, and where it settled. So if I buy a knockout and it doesn't touch the floor or ceiling, and it hits the end of the week and it expires, it settles, if it's higher than where I bought it, I would have a partial profit. If it's lower than where I bought it, but didn't touch the floor, I would experience a partial loss. So you might not experience maximum potential profit or maximum potential loss. If that you hold onto that knockout contract and it goes all week long, you might experience a partial profit or a partial loss when it ultimately settles at the end of the week. Okay? Very clear Delta 1 product. Now, I want to quickly cover call spreads, and then I'm going to go and spend 15 minutes on the platform, and you will see all of this in action, and you will go, I get it. Now, call spreads, very, very, very similar to knockouts, okay? They also have a price range. They also have a floor and a ceiling, and they also will move in line with the underlying contract. Now, it'll move, so it'll look an awful lot like a knockout, but they are not the same. They are similar, but not the same. And this is really, really important, okay, to understand the differences between call spreads and knockouts. And some people love the firmness of a knockout. Others prefer to have the what I'll call the softer version of a call spread. All right. So call spreads differ from knockouts in 2 ways. The most important of which, one, a call spread will not price settle. It does not settle if it hits a floor or ceiling. A call spread only expires at expiration. We start a call spread contract and we've got daily and weekly call spread contracts. They will only settle at a time. Okay, so there is no price triggered settlement. It is only time triggered settlement. That is a very important difference between call spreads. So if a call spread trades below the floor, if you bought it, you are not knocked out. You're still in the trade. If you bought it, it goes through the ceiling. You are not knocked out. You're still in the trade. Even though it's gone way up and you're making money, you're not knocked out. And it could come down and you can give that money back. But the reason people really like it is because if they trade it close to a floor, and let's say they bought it and it touches the floor, they're not knocked out. They have time for it to potentially come back and still to potentially make a profit. So there is optionality in a call spread. A knockout is firm, you get knocked out. A call spread has optionality. Knockout will be a Delta 1. It will trade right in line with the underlying. But because a call spread has that optionality, there is going to be a premium baked into the price of the contract. The marketplace is going to look for a premium. So things like volatility and time to expiration will impact the price of a call spread. Whereas those those don't impact the price of a knockout. A knockout is a delta one, trades right in line. A call spread's going to have a little bit of a premium factor in it because you have that optionality. And with higher volatility or more time to expiration, that premium value will be a little higher. If you get right to the end of a call spread and you're in the last, say, half hour, maybe an hour, and it's a low volatile environment, a call spread the prices of a call spread will be very, very similar to the price of a knockout because there's very little time and we said low volatility. It'll look similar to a knockout. But again, a call spread only gets triggered at expiration. All right, so that's a high level view of binary options, knockouts, call spreads. Now, if you take nothing else away from this, so I'm flashing, alert, 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 alert. Let me get your attention here. This is, if you take nothing else away from this session, an important rule when trading any Nadex product, any of them, just because there's an expiration associated with the contract does not mean you need to wait until expiration to see what happens. Does not mean. You can choose to exit a Nadex contract early. In fact, a lot of the successful traders that we see do indeed exit their positions early. Now, why would you exit a position early? And this is true for binary options. This is true for knockouts. This is true for call spreads. You can exit a position early to either lock in profits, thank you very much, or limit losses. I don't want to experience maximum potential loss. I was wrong. I want to get out of the trade. Get me out. Okay, that is a big difference. And when you talk about binary options, that's a huge thing. Where other binary options providers, you might be married to your position and you just got to wait and see what happens. You might like gold early in the day. All right, I think it's going to rally today. I'm looking at the binary options, and there's a binary option that's trading for a 30. Right now, there's only a 30% chance that it's going to finish above a certain price. But I think it's going to rally, and I pay 30. I buy that 30 probability. I risk $30, and gold indeed goes higher, and it goes right to the condition level. Now, we talked about that earlier. If it's right at the condition level, it's probably going to be trading around 50%. It'll be trading around 50. I bought it at 30. It's now a 50-50 proposition. I got to make a determination. What do I want to do? Do I want to keep, I could just sell it at 50. Thank you very much. I risked 30. I made 20. I'm done. I'm going to go on and look for another opportunity. Or I can say, I'm going to let it ride. All right. There's a 50-50 chance that it goes to 100. Hey, I risked 30. It went to 100. I made 70. That's awesome. Or there's a 50-50 chance it could go to 0. I risked 30. I was right. It went to 50-50, and then it petered out in the end. Gold isn't good in the fourth quarter. Gold sells off at the end of the day, and that binary option goes to 0. I could have locked in a profit, and instead I risked 30, started to make money, and then ended up losing the 30 because it went to 0. So just because there's an expiration associated with a contract does not mean you need to wait until then to do so. So I am now going to go over to, is there anything else that I wanted to cover here? I think that, and again, you can exit a trade early. I can't emphasize that enough. I think I covered this up earlier. You can email us at customerservice@nadex.com. This was recorded. Follow us on YouTube. Follow us on YouTube. You'll find our recordings there. You'll find our daily morning analysis there. You're always welcome to join us. We stream it. If you miss those are recorded as well. So if you're not there at 8:45 a.m. Eastern or 7:45 a.m. Central, you can still go watch it throughout the day. It immediately gets posted, and you can watch that recording. You can go back and watch the recording from today. We're just doing some analysis on what's going on, what could potentially happen. We're not giving you trade advice at all. We're just talking about the markets, looking at technical levels, and pointing out when there might be news events and when things might potentially move, because that can often create potential trading opportunities. This also will be available on our website. Okay. Now, with that, I am going to switch over to the Nadex platform, and I want to show you each one of these, and I want to show you how you can use the platform. Now, we do full-blown platform sessions that go a whole hour. So again, look for those coming up, or you can find a past recording if you like. So in that regard, we try to make everything available to you. But again, keep an eye for upcoming webinars. You're more than welcome to join us. All right, I am now going to go through each of these products on the platform. We're going to start with knockouts. And if you haven't been on the platform before, and by the way, this also works in a mobile environment. The experience looks a little different, but if you go to a web browser on your mobile device, okay, we use what's called Progressive Web App Technology, PWA. You will not find an app in the App Store. We are not in the App Store. Now, and there's some benefits to that, and I'll explain in a second. We use PWA technology. If you open up a browser, say you're on an iPhone, you're in Safari. When you're in Safari and you bring up nadex.com, at the bottom of your iPhone, there's a little share button. It's a little box with an arrow pointing up. If you tap that, you can actually save it to your home screen, and it will save as an icon to your home screen. Now, again, when you open it on your phone, your experience is going to look different than this. Because it's a phone. We can't fit all of this on the phone. It's going to have the same features. It's just going to look a little different. Then one of the cool things about using Progressive Web App technology is that whenever you tap on that icon on your phone and you open up the app, you are getting the most recent version of the software. Whenever we do updates, and we could do them frequently, it's there. There is no having to download and constantly refresh an app out of the App Store, or wondering why you always have the freshest version of our software if you put it on your mobile device. So again, you just go to a browser like Safari or whatever, you tap that share button at the bottom, the box with the arrow pointing up, save to your home screen. You will have an icon on your mobile device. You tap that icon, you are opening up the Nadex platform using PWA, and you will always have the freshest version of the software. So you can trade on the go, but it's a little bit more difficult to fit all of this functionality on a mobile device, but it's nice to know it's there if you need it. Now, let's take a look at knockouts, and I am going to go through, and I'm just going to use gold as our example until we get the binary options. Let's just go, because that's what I was talking about earlier. It's just easier. Oh, and gold's trading right at 1720. I am going to pick any one of these, and to populate the chart, I'm going to move this out of the way and hide this. And you will notice, let me just take a quick peek here. All right, yes, and I'm going to talk about market orders and limit orders 100%, 100%. Now, you'll notice there are four blue lines on the left. Those are the actual knockout levels. So I can see where the floor and the ceiling are for each knockout. So if I thought gold were going to go lower, I would choose, I might choose a knockout where the ceiling is a little closer. If I thought gold were going higher, I might choose one where the floor is a little closer. Now, when I can click on buy or sell in the chart, or on the order ticket. And you'll notice when you're selling, it's red. When you're buying, it's blue. So you know exactly what you're doing. Notice at the bottom of the order, oh, here I got a 2 lot in here. You can change your contract size. I'm going to make it a 1 lot so it's nice and easy. It calculates your maximum potential loss or maximum potential profit before you enter a trade. So you can, and I think I have my default order set as 2. I can fix that. But you can look and you can see what are my maximum potential profit or loss at the bottom. So if I bought this, I know exactly what I could potentially make and what I could potentially lose if the floor ceiling is touched. It is calculated for me on the order ticket. I can click sell. It's going to change those numbers because I'm going a different direction. You've got to choose which knockout range works for you with the proper risk reward profile. And if you don't like that risk reward profile, try a different one and see what your, click on this. Now I'm going to click sell. All right. And you can choose, I'll make this a 1 lot. You can choose which way you want to go, which boundaries suit your trade. Now remember, just because I buy or sell here does not mean I need to wait. If I bought a gold contract right here, and by the way, I don't have to trade on the prices. This is true for all of these. If I want to try to buy one at 1722, all right, below the market, I can just put 1722 and notice that's below the market. I'm going to place my order. I've got an order and you see it in my order section down here. I'm trying to buy one at 1722. It is below the current price. I'm allowed to do that. If I wanted to put an order between the bid-ask spread, 1722.80, 1722.8, place my order. That's my bid that just showed up. Okay, and I've got 2 orders in here now. Okay, I'm trying to buy one at 1722.8 and one at 1722. You can try. Now, am I going to trade it? I don't know. Remember, I'm in a demo environment. In a real environment, your experience would potentially be different, but I can put orders away from the market or in between the bid-ask spread. I do not have to always trade on the bid and the ask. Now, I am using a limit order. Okay, I want to show you something. If I go to a market order, this is something that is really important. I'm going to go to my settings. I'm going down to my settings. And this is, again, this will be true for any of the products. I've got tolerance levels for market orders. Now, what does that mean? That means if I went to buy gold and I've got $1, if gold were to move $1, I would still potentially trade my market order. If it were to move $2 before my order got executed, it would not execute my order. It's going to protect me because it got too far away. Okay, and you've got a different tolerance level for binary options and a different tolerance level for knockouts. So if I were to place a market order right now, notice I put market order to buy one. You're actually going to notice something a little different. My P&L is off by $1. All right, it's $1 higher. If I add this up, it doesn't add up to 500, it adds up to 501. Why is that? The reason that is it's going to assume if I place a market order that it's going to trade at $1 higher. This is the worst case scenario. We always give you the worst case scenario just in case. It might not be the worst case scenario, but we've got to share with you the worst case scenario if you use market orders. Now, the next thing I'm going to show you, let's just go for a market order to buy, and I'm going to place my order. And I bought one. Okay, I bought one for $17.23.90. Now, what happened? There's my position. Sorry. Okay, so I bought one. Now it looks, oh, look at this. It was too fast. You saw that it was red a second ago. It looked like I immediately lost money. Now it looks like I'm flat. The only reason, now what it's doing, just so you know what it's doing, is it's assuming if I bought one, if I were to go sell it right now, I would have to sell it at the bid 17.24. This is ticking higher. I bought one and it immediately started going my way. Now, if I bought one in the market, now it's even because I paid 17.23.90. When you buy one, often I buy the offer, and it's going to assume if I needed to liquidate, I would have to sell the bid. So more frequently than not, as soon as you buy it, it shows you as having a small loss. That is because as soon as you buy it, it doesn't generally just go up like it did for me. The price might stay the same. I bought one at 17.23.90, and the bid was 17.23.70. This probably showed up as a $2 loss immediately, just because I bought the offer, and it's assuming to get out I'd have to sell the bid. This is more likely what had happened. Is it showed up as a loss immediately. So just know that this calculation is assuming that you're liquidating your position at the current market prices. Okay? And meanwhile, it just keeps going up. Okay, so that's the order type of market versus limit. A market order, it's going to go and just buy, it's going to buy the offer, or it'll buy the offer up to my tolerance level, which I set in my, so it would buy the offer up to $1 higher. From knockouts and spreads, it would buy the offer up until my dollar tolerance in binaries. And you can adjust how far you want to give yourself for, if markets are really moving around big, you can adjust your tolerance levels to give you a little extra room, okay? So that's what market orders and limit orders do for you. Now, I want to, I spent a lot of time on knockouts and we saw a lot. I want to get into binary options. So if y'all will be patient with me, we're going to go a little bit longer than we had initially anticipated. I just want to show you call spreads for 1 second. Knockouts, we see the clear knockout levels. For call spreads, and let's just go to the, let's just go to the Dow Jones, and I'm just going to pick anything. Let's just bring up some call spreads. It's going to give you a shaded region, okay? And let's just make this a little bit bigger so you can see all the call spreads. And you've got the call spreads, and whenever I click on a call spread, it tells me the range. You can see on the chart, if I'm buying a call spread, here's the floor, here's the ceiling. If I were to buy one of these call spreads, well, I really couldn't make very much money because it's already above this level. I really couldn't make much money. It's already above this level, but I could certainly lose a lot because it could come down. So you've got to decide which call spread actually suits your trade. If you were going to buy the Dow Jones right now, you might want to, use a different call spread. Now, if I bought this call spread here, the 32,550, 32,850, and it tells me on the order ticket, and the bottom range of this call spread, if it went down, I would not get knocked out if it hit the floor. I would not get knocked out. I'd still be in my trade. The most I could lose, though, is $89. If I bought this and it were just to kind of drift lower or stay right now, I could lose $89. But I could potentially make 211 if it were to go higher. Now remember, if it touches the ceiling, I'm not knocked out of a call spread. A call spread, you have to close the position. It will settle. This one settles in 3 hours and 9 minutes, at which point your profit and loss will be calculated, the difference between where you bought and sold it and where it ultimately settles. But I don't have to wait until then. I could buy this. If it goes up, I can sell out and take a partial profit. All right. Now, I want to get into binary options, okay? Let's see how much time is left. Okay. God, let's just do a binary option, okay? There's 4.5 minutes left in this binary option. I am going to populate this binary option chart. I'm going to change this down to a 1 minute chart. I am going to zoom way in here. Let's get in here and see what's going on with these binary options, and we're going to watch these probabilities move quickly. All right, notice that the range in here, there's only 4 minutes to go, these probabilities are going to jump around. Now, let's say I think this is going to go down. I could sell one. All right, I just placed an order to sell one. Did I sell it? I did. I sold two. I sold them at 40 and a half. Okay, I sold them at 40 and a half, and I'm hoping that it stays below this level. Now, if it stays below this level, they'll go to zero and I will have made a profitable trade. I sold it. It did not settle above this level. I made a profit. Now, if I sell it and it goes above here, all right, and it settles above here, it will go to 100 and I would lose. Now, right now, I'm actually losing on this trade. All right, I sold it all the way down at 40 and a half. Now, what am I going to do? What am I going to do? Now, I could either, if I'm not comfortable now, okay, and I want to get out of my trade, I simply click on my trade and it will populate an order ticket, okay, to unwind my position. I might want to change this to market. I'm going to click on that. I'm going to make it a market order, and I can just simply unwind my trade. Right? I send my order to the market. It trades. I'm out of the trade. Okay. I unwound my position by clicking on it. I'm going to do that again right now. I'm going to sell this, and I think it's going to go down. I went and I sold two. I sold two at 48. Now, there's only 2 minutes to go. I'm not happy with my position. And I could do this actually to lock in a profit or to take a loss. I mean, right now I'm making a profit. I want to take this position off. It doesn't matter if I want to stop my losses or lock in my profits. I simply click on my order, okay? It populates a ticket to take the other side of the trade, and I place my order, and I'm out of the trade. And I actually, look at that. In a couple of minutes, I made 2 profitable trades in the Euro US dollar 5-minute contract. Look at this. And I'm glad I bought it back, because look what's happening. It's all the way coming back. It's now up above 50%. All right. And I can choose to think, you know what, it's going to keep going. I'm going to buy it. Now I think it's going to go higher. I'm going to buy it. All right. Now I'm going the other way. I bought them. Where did I buy these? I bought them at 44. All right, I needed to go higher. Uh-oh, it's dropping. There's only a minute to go. I bought them. Do I have to experience maximum potential loss? No. I can click to unwind my position, click place order, and I could try to, you know what? I did a limit order. Let's adjust this order. I'm going to click on the order I adjusted, and I want to make it a market order. Let's just delete the order. At this point, there's only 37 seconds to go. I'm going to take my maximum loss because I want you to see this. I took my maximum loss, but I want you to watch what happens with a few seconds left, with 25 seconds to go. All the prices disappeared. Now, why would that happen in the last 20 to 30 seconds? And the reason that happens is, and look at this, this is just dropping now. All of these are going to, I mean, right now, this one's going to settle at zero. This one's going to settle at zero. 6 seconds left here. This one, which was 100, is going to settle at zero. It just did. It just settled at zero, expired. All of these settled at zero. The only one that went to 100 is the one that was down here. If you want some fast, short-term price action, 5-minute binary options. And you can unwind your position by simply going to the positions page tab and unwinding your position. I'm going to go over here. These were 5-minute binaries. There's this little refresh button. I simply hit refresh so that I get all the new contracts. We got a whole new, there's 4 minutes and 24 seconds left, and we've got a whole new 5-minute contract range where you can start trading the next set of 5-minute binaries. So now, again, in the last few seconds, these binary options are going to be difficult to trade. You can put a price in. Someone may or may not trade with you, but it gets very difficult in the last few seconds. That is one of the reasons why a lot of people simply close their positions. And if you're trading binary options, if you're trading 5-minute binary options, people will often close their position with just 1 minute to go, because you just saw what can happen in the last 20 seconds. When we had this big red candle, it turned this binary option into a losing trade if you bought it. It turned this binary option to a losing trade if you bought it. They all will go to 0 or 100 in the end. So managing your risk can be helpful. All right. Now, if you do close a position, you will have a return, an ROI. It'll just be different than what potentially it was when you entered the trade. So for instance, on a binary option, if you bought an option for 50, a binary option for 50, and you had an expected ROI of 100%, you were looking at 2-for-1 odds. You risk 50 to make 50. Okay, you risk 50, make 50. Or that's 1-to-1. That's 1-to-1. Now you bought it at 50, but then you sell it at 75. You still got a 50% return on your money. I risked 50. I sold it at 75. I risked 50. I made 25. I had a 50% return on my money. That's not bad. That's a good trade. Everyone's got to make their own determination on their risk reward profile and when they want to take profits and when they want to let it ride and potentially try to capture all of it. And in the last few seconds, you saw how volatile it can be. A lot of people will trade, say, 2-hour durations. Let's get out of the 5 minutes for a second in the binaries. Let's just take a look at indices. All right, and let's just look at the Dow Jones. Notice we've got a contract that settles in 46 minutes. It settles at 2 p.m. Eastern. We got another one that settles at 3 p.m. An hour after that. It's got an hour and 46 minutes. People will trade, and look at all the strikes you've got. All right, we've got so many. People will trade these probabilities. Here's the at the money one right now. Okay. And in fact, I'm going to make this, I'm going to do this to make it a little bit easier. And okay. Now there is still, let's slide this out of the way. There is still an hour and 45 minutes to go. You're not going to get the hyper volatility in these probabilities, but people do trade. I mean, you're seeing these probabilities change. And notice that the 13,160 and the 13,109.40, I mean, one is right at, just below 50 and one is just above 50 because there's still an hour and 45 minutes to go. But you can trade. You don't have to wait until they go to 0 or 100. I can, if I think this is going higher, I could buy one at, I just bought a couple. Where did I buy them? I bought them at 51.5. Right now, notice it immediately thinks I'm losing money. I bought them at 51.5, and it thinks I'm selling them down here at 44.5, 45.25. This is why it looks like because I would have to cross the bid-ask spread. Now, do I have to wait and see what happens? If I'm waiting for this to pop back up, I think it might go. Maybe I'm happy if I'd be happy to get out at 60. I can actually click to unwind my order and change this price to 65. Okay, place more. I'm now trying to sell and close this position. If this trades a little higher and gets up to 65, notice that I've got this order right here to sell them at 65, and I would just, I paid 50, and I'd be happy to get out at 65 and make 15 bucks, for per one. If I did two of these, so make $30. I'd be happy with that trade. You've got to make that determination yourself. How much? What are you looking for? What are you looking to potentially make? And look, now it's trading higher. If this pops a little higher, I actually might sell it at 65 in the next couple of minutes. I don't have to wait an hour and 43 minutes to see what happens. I really don't. I could get out for a partial profit before. All right, and you can do that with binary options, knockouts, or call spreads. The other thing I am going to mention, because I'm not doing a deep dive in the platform, you can tear these charts off and have multiple charts open. You can even tear off your order ticket. So if you've got multiple screens in front of you, you can have 4 charts open and 4 order tickets open. And if you've got multiple screens, you could spread it out, and you can put so that you're looking at multiple markets, at multiple things all at once. But I would recommend you join us for a full-blown session on our platform. With that, I really want to thank, we went 15 minutes long, and I really want to be conscientious of everyone's time. Thank you for joining me today. This was recorded. It will be up on the website as soon as I can get it. If you want a copy of the slide deck, email customer service at nadex.com. They can get you a copy of the slide deck. You only get it if you request it. With that, I hope you join us tomorrow morning on YouTube for our live streams. I hope you sign up for our sessions next Tuesday. Thank you for being customers at Nadex. Hopefully you found this beneficial, and good luck in the markets, everyone.